This is Satya Pradman of Cirrus Research. The briefing report is just out. The title, International Markets Lead Over US to Continue. This chart says a lot. The US actually generated very strong returns for 2025. In fact, it was very turbulent, but surprisingly, the numbers came out strong. What's interesting is it lagged most developed markets and most emerging markets. At the heart of this, we make the case in our Outlook report that there is a broadening that's going on. It's occurring across regions, and it's occurring down cap. A lot of this has to do with the massive speculative readings we're seeing in the US, the amount of crowding as well. This is forcing investors to become more valuation sensitive. The value gap between large and small, massive. The value gap between the US, rest of planet, massive. So we think what we are seeing here is likely to continue as central bankers try to lose some dollar exposure. From a factor standpoint, what's super interesting is something we haven't seen in 2 years, really 3 years. Leadership broke down. Now, it doesn't feel that way because we're still talking about NVIDIA, but the relative strength factors in large cap lagged sharply. In fact, business momentum, the consensus sell side signals, they were actually quite helpful. Importantly, a better source for modeling this risk is beta. That shows that was much more resilient as a leadership factor. And we think that these are the examples of ways that we can kind of temper risk in the portfolio in terms of factors to use. What's also important is that in the AI spend story, 2025 was the first year that we really saw a true broadening. So broadening is occurring across markets, down cap, and through themes like AI. The example is that as much as semis and chips, AI chips did well. Their performance numbers were strong. So was big data, data centers, alternate energy like nuke, cybersecurity. Moral of the story is this is likely to continue, even if we're going to question the overall AI spend. One heads up and cautionary note is that industrials, especially in the smaller cap arena, have moved very hard. We are noticing some sort of hiccup in the CapEx spending data for industrials, whereas the CapEx tech accounts continue to accelerate. Something to look at, a little bit of defense there on the industrial front, especially in small cap, might make sense. Take a look at the full report and always happy to take your questions. Thank you.